The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
A beautiful October 29th at the headquarters of technical trading and investing. That is TFNN.com. And what else do we have going on out here? Of course, always a great day to be here at the headquarters of technical trading and investing. It is TFNN.com. Oh boy, if I'm trying to remember the quote exactly, but it's something to the effect of those that don't know history are destined to repeat it. And of course, on this day, I always like to, if we can, start off with whatever happened on this day as historical fact. Whatever happened before is probably going to happen again. Human nature hasn't, as far as I can tell, definitively changed in recorded history, at least when people could write. Not much knowing what happened on in those caves, drawing a picture of deers with antlers and stuff. I don't know if you can make much out of that, but once we learn to write and print, we've been accelerating at a huge level, but brother still kills brother. There's nothing definitive that changed. Stock markets are basically reflections of human greed and fear. And on this day on October 29th in 1929, we had what was known as Black Tuesday. It hit Wall Street, and it was the epitome of a market that had been weak since midsummer. $1 billion were lost. It was a big deal because 16.4 million shares were traded in a single day. To give you an idea, right now, we have that about once every 3 minutes. So a lot bigger than here. Stock tickers ran behind because the machinery could not handle the tremendous volume of trading. It was done on punch cards by then. During that time, IBM pretty much ran the stock market with their punch card machines. It took 2 or 3 days to get trades cleared, where they clear in nanoseconds today. In the aftermath of Black Tuesday, America and the rest of the industrialized world spiraled downward into the Great Depression, probably exacerbated by government intervention. We still have that argument today. One of the things that I actually have or do, there's a great book. Let me see if I can find my slide. Well, there's the chart if you're watching on Tiger TV. Not a great one. I'm going to have to find a better one out here. But you can see that pretty much going into September, the market had already started to weaken. In 1929, it closed down almost 12%. Of course, 1987 was actually 22%, much worse, but recovered fairly quickly. But more and more we're seeing the kind of volatility of 2-3% in a day is nothing for broad indexes. Anyway, what I was saying is I had a clip which I thought was very interesting. It was the grandfather of the current Forbes bunch. BC Forbes. But I did find this, and I thought it was interesting.
The Wall Street panic, in my opinion, is over. It had to come. Stock speculation had become crazy. Like an appendix operation, it's a good thing to have it over with. I personally have been buying stocks since the crash set in on Tuesday. And I have been urging everybody else who can do so to buy without going into debt. Every time America has had a panic in the past, it has paid people to buy stocks in the midst of the excitement. I am absolutely confident that stocks purchased during this panic, and we've had a panic, make no mistake about that, will also yield very generous profits. Now is the time to buy. I hope you have plenty of all to wade in and buy.
So basically, that was Forbes, and I think that was on Friday of that week, telling everybody to come in and buy. Of course, that went on for quite a while until most of the kings of Wall Street wandered in midday, about 11 o'clock, 11:30, wandered in and started buying vociferously. But the market continued down pretty much into 1933. But I think it was Keene and J.P. Morgan and a couple of the other big guys of Wall Street, steel magnates that had taken their money from, of course, the railroads and all that, and parlayed it into huge financial empires via the stock market. They wandered into the floor, and I think J.P. Morgan started it and just started buying just about anything. But that was week after. I'm going to have to reread it, but there's a great book. And again, you should have a healthy fear of the market, and probably no better book to give you that than John Kenneth Galbraith's The Great Crash of 1929. He's written two books that I recommend highly for traders, and this is one of them, The Great Crash of 1929, to really understand how a lot of these things work. And the other one is a short book of financial euphoria, but you can always find those fairly good. So anyway, interesting day when we look back all these years later, only to see we have markets that are as brittle as ever based on technology that is somewhat susceptible to error, and we'll get into that in just a second. What else do we have going on here? That's what it is. NASDAQ has been having problems pretty much all day, issuing the NASDAQ 100 and NASDAQ quotes, and these are for the major indices. Some of the other ones that have had problems out here are other indexes like the NASDAQ 100 and stuff like that. I don't know if it's fixed yet. It's been on, it's been off. Now, one thing I did hear, and then someone was told to shush up real quick, was that it was a denial of service attack. One of several that I suspect has been going on for a while. Denial of service attacks are when a hacker gains control of a lot of computers, probably somebody's home computer they left on for the day, and tells it to just repeatedly dial the same website or IP address. And of course, we've got a lot of people that if their cars were computers, they would spend 99.9% of their time with the hoods up on the side of the road, because of course they never put any new patches or anything else on their computer, never back them up. Of course, being a computer professional myself, I laugh at these folks. It's kind of like the same people that never change oil in their car, and when the engine blows up, they act amazed. You've got to know a little bit about what you're working with, no matter what it is, and not so much or none so much as a trader today trying to trade and not knowing a lot about a computer, or just deciding that if they don't want to know, that they better hire a computer professional to take care of all their computing needs. But what we've got, I suspect, are a lot of these rogue computers and servers that are pinging the NASDAQ. They've had several outages over the last few months. There's always been the quiet whisper out there that these are denial of service attacks from hackers. And I heard it whispered a couple of times today out loud, and then suddenly no one wanted to say anything more about it. So I'm wondering if this is not yet another one of those denial of services. because the way the NASDAQ is set up, there are a lot more points of egress for people willing to do bad things than the New York Stock Exchange. And we'll find out maybe one day that all these outages that we've seen over months, going back to Facebook a year ago, were they really caused just by NASDAQ not being able to get their act together? Or is it caused by people that would have no good to do? So, Z asked this earlier, huh? GLD making graphene glass. What do you think of Apple EPS? We're going to get into all that in just a minute, have a few questions. You can always give me a call at 877-927-6648, and we'll be glad to take your phone calls. Other things going on out here. Oh, I've got to play this.
I'm sorry, so sorry, that I was such a fool.
On the Hill today, we had the spokeswoman for Obamacare from the administration come up and take all the flack. Of course, it degenerated into name-calling, and one representative telling the other representative he wanted to starve babies and eat their brains, of course, not being true. And he was actually, the other guy fairly well said, you are offering a false choice. That is, if you don't do it my way, you're just out to kill babies. But of course, NBC reporting also today that the administration knew that up to 15 million people were not going to be able to keep, that was the estimate anyway, up to 15 million people were not going to be able to keep their insurance, and they knew that back in early 2010, and someone got a nice little document with Obama's signature on it stating that, and of course 4 different people coming out to NBC News and verifying that they've known for a long time that wasn't true. So the question, I guess, gets into how can we make any money of that in the stock market? Of course, most of the insurers are down today, but it's kind of tough to tell whether it was Aetna. I think it was Aetna that came out with earnings. Or if it is the downside thought that there would be if enough people don't sign up for Obamacare by the first of the year. A lot of these insurance companies were figuring that they were going to be able to make a great deal of money because of higher insurance premiums. I am one of those folks that would be doing that kind of stuff. We'll be back in a minute. Continue our discussion and get into some stocks and then talk about the FOMC tomorrow. We've got a lot of stuff going on. We'll be back in a minute.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
On the Tech Insider Hour with Tom O'Brien, 3-4 weeks ago, whenever the 5C iPhones were starting to ship, we had a big discussion, and I went through pretty much the way the margins are going to work out for the 5Cs. We talked about how Wall Street reacts to margins, and I almost felt like doing one of those montages of people saying margins today on CNBC. If I would have recorded the whole day out there, I probably could have had, I would say, maybe 250 times they referred to Apple margins already today. Of course, they were off about 1%, which doesn't sound like a lot. But, of course, Apple has been the company that's always exceeded expectations, not missed them. The stock started trading lower. In the morning hours, it looked like someone had come in and put a floor under that. Of course, Apple is still actively buying their own shares. My guess is that they were out there today and at least holding it up in the morning. They got a market shill, a.k.a. Kramer, to tell everybody why those numbers were just lying to them. Don't believe your lying eyes. Just go ahead and buy, because these stocks, they only go up. And, of course, Apple is a great company, and I have an Apple device, and I'm Kramer, so the stock's going higher. Kind of a retarded argument, but, of course, he does have enough people that follow him that I think that they boosted the stock up early in the morning. But what do we know? The sales were weak on the 5C. The only thing that actually helped them, if they would have sold more what they thought that they would sell, the margins would have been absolutely worse. What they did find out is that selling the 5S is their bread and butter, and trying to go down market probably doesn't help them a lot. Probably sales of the 5C are somewhere around 50% what they looked at. People buy the 5S in colors mostly because it is a status symbol. It is them being able to buy a Mercedes but not have to spend $100,000. They can buy a Samsung for $300 or a iPhone for $500 or $600. That's even without a contract, of course. Some of the iPhone 4s are going out the door at no cost if you're on a 2-year contract. Other people are making a lot of hay about their sales figures being changed because software sales, normally what they would do, or what they had done in the past, was know that they had an average of about $65 of stuff that people would be buying through the iPhone store over the life of a contract. So that they were putting that in and up front. Generally accepted accounting principles went after this kind of action, and of course they've had to now defer those until people actually spend the money. So there's kind of a little glitch out here. It is a cult stock. Even Carl Icahn went on CNBC a week or 10 days ago and said he knew it was a cult stock. But in the earnings call, the replacement of Steve Jobs said that the holiday quarter would be huge. And this is a question I have as a matter of policy. If you can start off and buy a perfectly acceptable tablet for $140, $145 from Amazon, are you really getting that much more buying a tablet with the high definition display? And the answer is really not that much. You're getting a little faster processor. You're getting the Apple ecosystem. If you're sitting and watching YouTube videos and sending some email via your Gmail account, probably not a lot of difference out there. Some people will buy Apple no matter what. And some people, I suspect the greatest amount, mostly because Walmart's been making comments that the biggest layaway items that they have right now are tablets, and they are not iPhone tablets. They are less expensive tablets, but Amazon's and some of the other Nexus Google tablets. Of course, that is a company advertising and going after a lower common denominator for socioeconomic numbers. But we'll be back and we'll fix this or talk about this a little bit more. But the question is, how's Apple run into the law of large numbers? We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
So what do we have going on? Apple, the question is, have they hit the law of large numbers? In companies, there's a probability theory that's in this, and mostly it has to do with the if you throw dice long enough, what will be the average of the numbers. Basically the same thing that you get at a casino where people all come in and play the one-armed bandit. If the odds are correct, you don't want to be having one big bet for $15 billion. You want to have a lot of little bets, and if your odds are on the right side, like a casino, you're basically going to lose 57% of the time playing somewhere around there, maybe 60% of the time. You're going to lose more money than you put in. If you do it long enough, you're just going to lose. That same kind of thinking basically comes in, but another branch of that same mathematics called the law of large numbers. If you're selling one device and you sell two, you just increased your sales 100%. The problem is Apple is so large. At one point, what kind of business do you need to go out there and continue growing at those kind of margins? The belief was, and Steve Jobs said it during the last earnings call, but he didn't say it clearly on whether or not they were going to have new products that had the same kind of reach that an iPhone had or a tablet had. And everybody was fairly disappointed to go through last Tuesday's announcement where they were showing the new tablets to get into earnings now and still hear nothing about a new Apple TV, nothing new about a Apple Watch. And the question is, from a lot of people, have they hit this large number problem where no matter what they do, it's just not going to make the needle move very far in the stock. Of course, if you've got $150 billion, I'm not going to be shorting it, but because it has such a huge impact on the indexes, I decided to spend a little extra time on it. One of the things that no one thinks about, and all these people that are the Apple, what I call appeasers or apologizers do, and they still don't know it. They won't admit it. They act like it doesn't exist. It's almost 4 years now. But 4 years ago, Android had 0% of the market of smartphones. Okay, we fast forward to today. Apple has 19% of the smartphone market. And the question is just how long can you be a boutique player as more and more new features come into what is the Chevrolet of smartphones, the Android product. Now even Chevrolet has a Corvette, and so does Samsung. But by working with a multitude of different manufacturers, Google has done an extremely decent job of attacking an entrenched, defendable position and taking 80% of it away. Actually, I think 5% of that is RIM now, but for the most part, that RIM business is going away in a year, and there's going to be, for the most part, 5% Microsoft and the rest of the bunch, and 75% probably of Android, and 19% and shrinking Apple. Of course, talked a little bit about Kramer drinking the Kool-Aid first thing this morning. No matter how great your product is, as you continue to lose market share, each one of those sales that someone else gets is one that you didn't get. And it is money you can't put back into new arms for more fighting next year. And you kind of have to think of it, this is a war that probably is not going to cease until one side gives up and goes bankrupt. So it can go on for years. It can be over in a year, like in RIM's case. But the problem is that no one talks about the whole problem with losing market share, losing margins, and the belief that Apple can only go up. Right now, I think that it probably will go up a little bit, but left to its own devices, if Apple wasn't buying back its own shares, if we didn't have Carl Icahn out there trying to tell everybody he's going to give them a one-time payoff of that $150 billion, would Apple be above $500 today? My answer is no. There are better shorts in the marketplace, but keep an eye on it. Okay, what else do we have going on here? Forrester Research came out. We've been talking about a lot of these stocks coming out with earnings. We'll talk more about them. Forrester did a research piece on Facebook and asked advertisers how well they liked it compared to 13 of the other top channels for mobile advertising. Things like Google and Facebook and YouTube and a lot of other advertising channels. Basically, of the 395 businesses that they got to respond, about 51% of them said that their advertising on Facebook was not profitable for them. We've talked a little bit about Facebook being profitable for the first time. They came up with a new model and a new way to push retail ads on Facebook. The question is, in 3 months, how many of those people were still going to be around and still liked it? They are certainly not liked for most advertisers. In fact, the guy was on today on Bloomberg or CNBC talking about his study. But that is the problem, is retention of those advertisers. And we still don't know. So I'm not going to be bullish or bearish on Facebook until we have some kind of history on how people do. We know on Groupon it didn't take very long for that model to fall apart. We could see the exact same thing in Facebook. It could be the biggest success headed for a failure, or it could just be horribly overvalued. Maybe its value is really 50% of where it's at today. I suspect that what we're going to find out is, of those people, they made a lot of sweetheart deals to get the mobile advertising movement in Facebook moving. A lot of them now are probably facing higher ad rates in the going future, and we're probably going to see a much soberer report in the coming days on Facebook. But we'll find it. Dave, Apple says that once Apple comes out with larger screens, all will be well. Well, they're buying those displays from Samsung, so Samsung's going to have the same thing. Apple has to compete with people who make the hardware that they use. I don't understand. Can they have a little bit better software? And I think the answer is probably a yes and no. But what can you say? What else do we have out here? Fed's going to be out at 1 or 2 o'clock tomorrow. I think the market is actually on hold. Volume's a little lighter. I don't know how much that may be because of the problems on the network today, but we'll have to take a look at it. We've got a lot of IPOs set up for this week. Before we get into them, Google, I was going to talk about this on Friday on the Tech Insider Hour, but actually spilling over to the Drudge Report today is that Google has these giant barges off Treasure Island in San Francisco. They've also seen new ones outside of the Bay Area up in Portland, Maine. And these are these giant, not the river-going kind, these are the ocean-going kind barges, which are, imagine something the size of a cruise ship, but this is a barge sitting about 20 feet, maybe 15 feet out of the water, destined to pour coal into and drive across the ocean to China and sell the coal. These things are absolutely monstrous, the size of city blocks, and several city blocks at that. What they've done is build a business, a retail business, and the question is what it's for. My guess is it's for Google Glasses or Google Glass. The whole front of these things are glass, and my guess is they're just going to park them temporarily and show off. They're big. They have lots of little offices kind of in them. My guess is that they're going to get together with all of the partners that have applications for Google Glass, and they're going to go in there and park these things in downtown cities that are accessible by water. And by doing that, they don't have to buy long-term leases in retail spaces. Probably going to have them there for a month or two. Going to go take them all apart when they're done, and no big deal. Sustainable. But a lot of people are asking what these things are for. But pretty easy to tell in my estimation that these things are going to be for Google Glass. And with the amount of office space they have in their little nook space, it's going to be one of these things where you can walk in and look at 40 or 50 or 100 application developers showing what they're doing for Google Glass and hawking them. Question is when and if they're going to make it for Christmas. And, of course, I think only your hairdresser knows for sure. What else do we have out here? Oh, IPOs. 58.com, online classified marketplace serving local merchants and consumers in China, plans to raise $154 million by offering 11 million shares this week. Symbol will be WUBA. Brixmor Property Group. The symbol is going to be a BRX. Operates the largest wholly owned portfolio of grocer-anchored shopping centers. Plans to raise $750 million this week. BRX is going to be the symbol. Crito, CRTO, a global online display and retargeting company with over 4,000 clients, plans to raise $176 million by offering 7.2 million shares. Sounds flaky to me. Essent Group, ESNT, a recently formed private mortgage insurance company, plans to raise $286 million by offering almost 20 million shares. Marcus and Millichap, MMI will be the symbol, a leading national brokerage firm specializing in commercial real estate, investment sales, financing, and research, plans to raise $90 million. And Quartet Merger Corporation is a blank check company formed to acquire operating businesses and plans to raise $84 million. Rather dubious. Cunard, Cayman Islands, symbol's going to be QUNR, is a Chinese travel fair comparison website. So all the ones in the United States, just think William Shatner. It's going to be owned by Baidu, but of course they're doing an IPO because they need the money. Plans to raise $117 million by offering 11 million shares, somewhere between $9.50 and $11.50. So we've got a lot more dubious IPOs this week. I think the last one here is Surgical Care Affiliates, SCAI, which operates the third largest network of outpatient surgery facilities in the U.S., plans to raise $220 million while offering 9.8 million shares at a price range of 21 to 24. I don't know how you'd price this thing because, of course, no one knows what they're going to get paid. The whole Obamacare thing still doesn't let doctors know what they can charge, and probably not going to even know until into next year. I don't know about the wisdom of rolling out something when there are so many unknowns. The Container Store Group, TCS, is the only national retail chain of storage organization products. But I tell you what, Messy Closet. They should have called it this, Messy Closet. Plans to raise $188 million by offering 12.8 million shares. Why don't we get a bunch of hoarders and shove them into Container Store Group? That'd be like killing two birds with one stone, forcing people to get organized that aren't. Of course, all the hundreds and thousands of cats in the stores probably wouldn't be a good thing. A lot of those hoarder shows. We've got one more here. I thought there was this. I knew there were a great deal of IPOs coming out this way. Veracyte sells molecular diagnostic tests for thyroid cancer. It's supposed to be a little better version of the existing thyroid test. Plans to raise $66 million by offering 4.7 million shares at a price range of 13 to 15. And that's pretty much all. So when we get into the rest of the show out here, we're almost running out of time. Probably in KD, it's all going to be about LinkedIn after the bell tonight, and then, of course, about the Fed tomorrow. So we'll probably have about 30 minutes of active trading in the morning, and then we're going to all be on Fed Watch waiting for them to come out. I can't remember if it's 1 or 2 o'clock tomorrow, but we'll be doing that. So we'll look at LinkedIn when we come back, maybe a few other stocks reporting before the bell.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And after the bell, we have LinkedIn and Yelp. Yelp probably not going to move the needle very much. LinkedIn probably could. It's come back up. It's up at these highs. It is a company that makes money by selling advertisement, mostly by headhunters and those people wanting to employ people in certain fields. Very heavy in the tech industry. People become a member of LinkedIn and have their portrait on there, have their Facebook page for all practical concerns. But because LinkedIn is a business-oriented website, it isn't a bunch of kids with horrible pictures. It's all people trying to represent themselves in a public fashion. And their LinkedIn page gives you an easy way of finding them. LinkedIn then takes all those pages and sells them back to headhunters and looks and sees what the people do. And if a company wants a list of potential employees, if they're moving to an area, want to find out if there's enough technical services to support a office in an area, and it basically just a big online headhunter company. Of course, they make very good margins at doing this. This is the business that when it went public, I said was 100 times better than Facebook because they had already figured out how to make money. They charge businesses to get access to their lists of people in certain businesses and with certain experience. And that's why there's a lot to fill out. I'm not a member of any of these cults like Facebook or LinkedIn. But if I was going to do one, it would probably be LinkedIn. Of course, don't really know what's happening with LinkedIn. They had some troubling things in the last earnings report, and that had been an issue. And I don't know. It's real hard to tell. This thing, just a few bucks off of its all-time high out here at 257.56. But it's probably going to be all about what they say. A lot of people, as long as their numbers are okay, it's going to be more about the forecast. But we'll have to see. One of the things I did notice today was my new insurance rates, and I thought it was very interesting, so I wanted to play this.
I want to have babies. You want to have babies? It's every man's right to have babies if he wants them.
But you can't have babies.
Don't you oppress me.
I'm not oppressing you, Stan. You haven't got a womb. Where's the fetus going to gestate? You're going to keep it in a box?
Yes, and that's the question I have. I noticed that because of the new regulations, the insurance policy I will have to have will require me to have care in case I get pregnant. I'm mesmerized by the one-size-fits-all policies of healthcare, and it's just when I heard and saw that, I was kind of mesmerized by that whole thing. If you remember it, that's a clip from The Life of Brian, where they're making fun of socialists. They're all sitting around watching, I don't know, some guy getting chased by a lion or a tiger and buying things like drinks and food coming by. But interesting movie if you want to go see it. But the first half is just nothing about them making fun of the socialists in Britain circa early 70s. But always interesting. And, of course, no, I don't have a womb, nor am I planning to get one. But if I have to pay for it, I'm going to find some way of having a child and sticking it to the man. Anyway, we will see you tomorrow. Same bat channel, same bat time. And, of course, Andy Heck following me, stalking me once again today. We'll look for him in just a minute.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.